There's a lot of buzz about Elon Musk buying OpenAI, but that story is not all that it's cracked up to be. We're also taking a look at a SolarWinds acquisition or private move, WEKA's focus on AI, Cisco showing off Cisco One Silicon at Cisco Live EMEA, Hammerspace changing the AI training game, the French announcing an investment commensurate with their size in AI, and Huawei's success in revenue growth despite being banned by Western nations. All that and more in this episode of the Gestalt IT Rundown. Welcome to the Gestalt IT Rundown, where each time we meet, we run down the IT news of the week with a variable degree of snarkiness. I'm your host, Stephen Foskett, and joining me today as my co-host from the other side of the planet is Mr. Alistair Cook. Welcome to the show.
Always a pleasure to be here and to, of course, take the place of Tom Hollingsworth to bring as much snark as possible to the show.
Wait, are you trying to say that I'm not snark enough?
Well, I'm not replacing you this time.
That's true. I guess sometimes you do, sometimes you don't. Whatever. I guess technically I'm replacing Tom, who is in Amsterdam at Cisco Live Europe. So check out the Tech Field Day website to see if you're missing Tom, or if you're interested in Cisco, or for whatever reason, to see what's going on at Cisco Live Europe with Tech Field Day. So if you know anyone who needs a hug, or if you need a hug, please understand today is National Hug Day, and it would be a great day to do that. It's also National Darwin Day, so after you give them a hug, you can see which of you is fitter and survives.
These large bear hugs, of course, are an important part of National Hug Day. I think here in New Zealand, we celebrate things a little bit differently. I hug my friends every day. And of course, it's been a long time since metrification here in New Zealand. That happened back in 1979. So it's a bit hard to find a lost penny today in New Zealand. It is, of course, National Lost Penny Day as well, which is probably more valuable in the US. Although if you do find a 1979 New Zealand penny, you're probably doing pretty well.
Well, it's funny. The day before, or the Sunday before National Lost Penny Day was National Superb Owl Day, the big game here in the US. And I guess the president was bored of the game, so he decided to issue an executive order to abolish the penny in the third quarter. Wait, oh man, I just made a money joke. Well, let's get on with the news instead. With its $4.4 billion acquisition of SolarWinds, Turn River Capital seeks to take IT management software from public to private. And the company says that this will allow it to focus on long-term growth without all that pesky quarterly earnings nonsense. This deal aligns with a broader surge in private equity buyouts in the software sector, driven by declining borrowing costs, and comes after SolarWinds' turbulent past, including a major 2020 cyber attack that compromised government corporate clients and made it, it passed the mother-in-law test in that everyone had suddenly heard of this company. Alistair, what do you think of this acquisition and the private move?
Well, I think it reflects what we've seen in the wider industry. We definitely have seen this move towards private equity buying these organizations as an exit for some of them. I think specifically for SolarWinds, we've seen some resurgence in SolarWinds since the 2020 debacle. I think they learned a very, very painful lesson in being much more careful with their supply chain. And so their stock price recovered for a while, but the valuation dropped quite a lot over the last couple of years. And so I think this is what's driving towards the need to move away from public funded and also funded by borrowing that they've been doing for a while to continue the development. SolarWinds, of course, has been a good friend to Tech Field Day in the past. I've been to their head offices in Austin with you, Stephen, and really impressed with the diversity and range of products that SolarWinds has. But everything keeps changing, and the move to cloud and to hybrid and multi-cloud really does drive a need to look more broadly at how we manage applications and the tools that we're going to use to manage our applications and infrastructure. And so there's going to be a need for funding for that development, that engineering costs money. And with the way SolarWinds' name has been in the not too recent past, in the more distant past, getting that funding to do these innovations may have been more difficult. So the move to private, particularly under a large equity company, allows for that capital to build all of that engineering. I think in the end, it'll be a very good thing for SolarWinds, and I wouldn't be overly surprised if we see more acquisitions and a broader portfolio, possibly with a new brand name around it somewhere along the way to fully ditch the 2020 debacle. WEKA is restructuring its go-to-market functions to align with the rapid growth of generative AI, following a strong 2024 in which it raised $140 million in funding and surpassed $100 million in annual recurring revenue. CEO Laurent Zwiebel emphasizes that this strategic shift will position the company for long-term success, with plans to expand headcount by approximately 120 employees to support large-scale enterprise AI and GPU-accelerated deployments. This is a pretty big move for WEKA, isn't it, Stephen?
Yeah, absolutely. And I think that they certainly caused a little bit of concern last week when these announcements came out that they were cutting headcount. But and of course, that affects a lot of people. But I think that maybe once we take a closer look at it, it makes a lot more sense. I mean, first off, though, let me just say that some of the people that are no longer with WEKA were people that I know and that I'm friendly with. And I wish those folks the best in their search for a new position. Uh, I think that it is very clear it's very clear to me that this doesn't reflect on their performance on the job. It reflects on a change in focus for WEKA. So I certainly wouldn't judge them for being out of the company. I also applaud the fact that WEKA is really focusing here on a market that has been successful for them. I know for a fact that WEKA has seen incredible success in the AI market. They are really, they're powering a lot of the major AI training infrastructures out there. And if I was the CEO of WEKA, I would probably focus the company on that as well, because the other markets just haven't really shown up for them. So it does make sense that the company has done this, and to the point here, I think that it makes sense to look at this not as a symbol of a struggling company, but as a symbol of a company that is finding its footing in the market and figuring out exactly what it means and its own place in with companies. It also shows, I think, a broader trend in the storage and data infrastructure market, where companies are finding that the AI market is really the most lucrative market, certainly, but maybe one of the only growing markets in storage. Again and again, I'm talking to storage companies all up and down the stack, and data companies as well. And those companies are saying that AI training is really the bright spot in an otherwise fairly dim market for standalone storage solutions. So again, it makes sense that WEKA would focus on that. That being said, the AI market is rapidly differentiating itself as well. And so we're seeing companies that are focused on training and scale out. We're seeing companies focused on bridging the data center to the cloud. Others are looking at fine tuning and AI models. Other companies are looking at inferencing and supporting AI at the edge. And there are many, many aspects of this AI storage market that are emerging. So WEKA doing this change makes a lot of sense, but it also, I would not be surprised to see many of the other storage industry stalwarts also making similar moves to focus on the AI market, and specifically to focus on a particular niche within the AI market that serves or is well served by their products. Cisco Live EMEA is happening this week, and we're there with Tech Field Day. Tom Hollingsworth and the crew of delegates are on site. They've been hearing from Cisco about some big announcements. The biggest news comes with investments in new service provider hardware and data center infrastructure, which appears to be positioned to help Cisco customers take advantage of AI and also offering a custom advantage for the company. These new platforms are powered by Cisco's Silicon One chips. The newest A series and K series CPUs help offload processing to the edge and give Cisco an opportunity to challenge merchant silicon vendors in the space. For more on this news, we're going to go on site to Tom Hollingsworth in Amsterdam to tell us what all this means.
Thanks, guys. I know that I'm in Amsterdam this week, but it's Cisco Live and it's making news. So I just couldn't resist the opportunity to talk about some of this cool stuff. Now, obviously, we got some of the overview of it during our Tech Field Day extra sessions. And a lot of people were focused on the hardware aspect of it, right? Oh, there's new Agile services, there's new switches, there's lots of that stuff. But I thought it was really interesting that Cisco is doing the Silicon One story in all of those devices because I think that it is a bigger deal for the future for Cisco because having a unique customizable chip that can be tailored to certain workloads gives them a huge competitive advantage. When you think about a lot of the other vendors that are trying to build a lot of these technologies with custom uh, modifications of off the shelf merchant silicon, that is a lot harder to do because you've got to work around what somebody else designed in order for you to be able to provide the performance level that people are expecting. Whereas with Cisco, because they're so tightly integrated in the Silicon One development process, they can offer these kinds of performance gains that you get out of the A series and the K series by distributing some of the processing offload at the edge. And some of the other things that I was seeing that were kind of interesting is that they can do things like providing on-device firewalls and integration with things like AMD Pensando DPUs. And I have a funny feeling that that's just the tip of the iceberg, because if they can develop Silicon One into this fully featured custom silicon offering, then that means that they could do things like, say, in the future, develop their own DPUs or develop the kinds of chips that would allow them to kind of get a leg up on some of the AI focused technologies that are out there. I mean, let's be fair, everyone is kind of in a horse race with Nvidia right now, but you don't have to unseat the king of the GPU if you can offer things that accelerate pieces that deliver data to the GPU. So I think that Cisco's kind of staking their claim by saying all of this effort that we've made to create custom silicon for these workloads is not in vain. And I think that what we're seeing with some of the other developments in the industry around other companies that are trying to develop their own chipsets is valuable enough that Cisco could find themselves vaulting into different spaces. Well, that's enough out of me from Amsterdam, so I'm going to go ahead and let you take it.
Thanks a lot, Tom. It's good to see that you're learning a lot there in Amsterdam.
Hammerspace is challenging the conventional reliance on object storage for AI workloads by advocating for universal, protocol-agnostic data access instead. The company has emphasized the importance of intelligent data orchestration across various storage types, ensuring seamless access to relevant datasets without disruptive migrations. As AI adoption continues to grow, Hammerspace highlights the need for metadata-driven automation and hybrid access models to optimize performance and scalability in enterprise environments. And like all AI, all storage companies, AI is really where the news is at. And Stephen, is Hammerspace doing something really different here?
Well, certainly Hammerspace is doing something smart here, and that is that they are trying to help companies bring the data as close as possible to where it's processed and bridge the gap, the data gap, between where their data is natively stored and where AI needs it. They are not alone in saying that the reliance on basically cloud native platforms may be a good move for cloud first companies like the hyperscalers. But Hammerspace also recognizes that there's data in many, many other places that aren't necessarily cloud first, especially as the enterprise moves into this space. So, for example, we heard recently that Hammerspace is partnering with Cloudian, which is a company we're very familiar with here as well, so that its object storage repository can be used by Hammerspace's global data platform to serve customers that way. They're also supporting NVIDIA's GPU Direct Object Storage model, which allows storage to basically be more efficiently integrated into the GPU training data pipeline. This interview that we're going to link to here by my friend Chris Malore over at Blocks and Files, he talks to Molly Presley, another very familiar person, talking about the ways in which Hammerspace is being used to build this sort of hybrid data platform with on-prem enterprise data as well as cloud native data. And that mirrors what we've heard from Hammerspace at our Tech Field Day events. For example, we were recently saw them at our AI Field Day event last year, and they had a similar message, though it's very clear that they have now moved forward in terms of product capabilities here. So yes, I think that this makes a lot of sense, and it reflects what I said in the previous story as well, in that we're now kind of emerging into the next wave of AI data integration, where companies are trying to get smart about integrating various data platforms with various AI platforms, and being able to not just have that sort of uniform corporate cloud first data, but being able to integrate a different type of data as well. We're also seeing Hammerspace integrating real data, not just storage, which is another trend that we're seeing in the enterprise data infrastructure market, so that structured data and so on can be integrated into AI training too. And of course, over time, I think that the Hammerspace's true value is going to come once we start seeing AI inferencing on more broadly implemented enterprise applications, and they need to have, for example, retrieval augmented generation or RAG applications accessing a diverse set of corporate data. That's really where Hammerspace excels, because it's all about creating sort of a uniform, unifying interface for data that literally is anywhere. So I love what the company is doing, and I've been hearing very good things about it as well from customers and partners in the industry. French President Emmanuel Macron announced $112 billion in private investments for the AI ecosystem, with funds expected to be deployed in the coming years, coinciding with Paris hosting the AI Action Summit. This investment will primarily focus on AI data centers, and the country is positioning itself as an ideal location for AI infrastructure due to its low carbon electricity and stable grid. Macron emphasized that these give France a competitive advantage for attracting global AI investments. And of course, we are seeing retrenchment of global AI along the political lines of the US, the European Union, the Arab world, India, China, etc. Alistair, what's your impression of the French push to make France the center of AI for Europe and perhaps globally?
I think it is useful to put this whole thing in a little bit of perspective. One of the perspectives that Macron gave was around population. So whilst the US has committed $500 billion for Stargate to build data centers for AI on US soil, this commitment of $112 billion US dollars equates to proportional with populations. And Macron was saying that France has a fifth of the population of the US and is making a fifth of the investment. So it's clearly as significant for the country as it is in the US. And I think that is definitely this idea that AI is a global phenomenon, but it's not happening as a global cooperation in the way that you might see the more academic research occurs. This is now very much business, and that AI innovation is seen as a national interest business prospect. It's probably a national defense angle there, although that's not being played up in front. This was the third International AI Summit. The previous two were one in the UK at Bletchley Park, that's very well known for its World War II code-breaking presence. The other was in Seoul in South Korea. So this isn't just a European link. It is a bit more widely aligned, non-US though. I don't see a huge sign. You'd expect if the US was heavily involved with this thing would have come to the US. We're definitely also seeing a lot of investment by other national interests. So there's billions of dollars being invested by the UAE, the United Arab Emirates. There's more billions of dollars being invested by Canadian firms in building AI data centers. So we definitely see this need for large data centers to operate AI, as we've seen in other stories in this rundown. There's huge amounts of data, huge amounts of compute required, and this is significant investments in data centers. And this has been a theme we've seen in the rundown for quite some time. What's a little new is this focus on it being a national resource or a regional resource, and that it's playing more in a geopolitical space than a straight up technical space. And this is always a reality for advanced technology, but it's much more visible in here. Macron particularly talked about a few of the French AI startups like Mistral and Wondercraft, and there's still competitive advantage for some of these organizations, particularly with the legislative frameworks in the European Union. So there are a lot more restrictions around use of data, of privacy, and much more of a looking after the common person approach in legislation than we see in the US. We definitely see in the US a much more open slather. We've recently seen some disclosure about essentially use of pirated content, pirated protected content in order to train large language models in the US. And that's the sort of behavior that the European regulations are supposed to be restricting. So we're definitely seeing some of that implementation following the regulations in the different geopolitical locations. And I think we'll continue to see this. We saw China building their own large language models that suit, again, their political objectives, and making a big splash with DeepSeek to, again, gain that political benefit. And we're not part of the US, we're doing great innovation, and we must be wonderful people. And I see that happening all around the world. So yeah, I expect to see continued regional development, particularly to suit regional needs. But these are huge amounts of investments that are required. So little old New Zealand, I don't think we're going to be building these massive data centers, but here in what we like to call $2 Tauranga, maybe we'll build something smaller, and maybe we'll build something more efficient. Huawei expects to meet its 2024 revenue target of, well, 860 billion yen. That's 118.25 billion US dollars. Marking 22% growth for Huawei compared to 2023. Despite sanctions, Huawei being a Chinese company, its IT business remains strong, its consumer sector is growing, and its smart car solutions are expanding quickly. The success is notable considering Huawei's challenges, including the sale of its Honor brand, which was its handheld mobile devices, and the difficult economic environment in China. Stephen, what's your take on this massive success for Huawei with this huge growth?
Well, it's interesting, isn't it? Because the U.S. would have preferred that Huawei fell apart and went by the wayside because of the sanctions that they pushed against it. But in fact, Huawei seems to be doing quite well indeed. And this, I think, is a reflection of something I've commented about here on the rundown in the past, which is the double-edged sword that is international sanctions and protectionism. Essentially, by blocking the availability or restricting the availability of advanced chips and others, and by blocking the market for other competitors, this has enabled companies like Huawei to basically develop their own homegrown alternatives that are now emerging as competitive. As you mentioned, China is a leader in electric vehicles, and many of those are using various components from companies like Huawei. The same is true of many other consumer products. Now, they may not have their own smartphone brand anymore, but they certainly do produce a lot of chips that are used in a lot of smartphones outside the US sphere of influence. One thing I would call out, though, that I was surprised here is that nowhere does it really talk about in this article. It doesn't really talk about Huawei's Ascend GPU chips. Now, this is important because, of course, the news recently that DeepSeek was able to develop their model much, much cheaper than Western models, which we have thoroughly debunked in the last few episodes in the last few years. One of the aspects of that was that DeepSeek was using Huawei's Ascend 910C AI chips, which they found were about 60% as fast as the Nvidia H100, which is to say they're pretty darn good. I have heard from my contacts in the AI industry that these chips are indeed pretty good, even though many people have expressed concerns and issues with reliability and having to rerun training runs after a chip stops responding for one reason or another. I mean, it's pretty advanced technology, but maybe not quite up to the Nvidia level of reliability. Still, Huawei has been able to sell these chips and power really earth-shaking developments like DeepSeek. Going forward, Huawei is going to continue, I'm sure, developing their own, 5G chips, which are used again pretty much everywhere except in the U.S. We will also, I'm sure, see a lot more about Huawei's homegrown GPUs, and it seems that they're catching up pretty rapidly. So overall, it's not surprising to me that Huawei has been able to weather the storm and the sanctions and emerge victorious. And maybe those with a protectionist bent should consider that sometimes protectionism can spur the development of new competitors instead of necessarily giving the result that they're looking for. Now let's take a closer look at one of the stories that's been dominating the headlines. Just the other day, there was an announcement, a tweet by, it's not called a tweet anymore, whatever the heck Elon calls it, saying that he wants to buy OpenAI. Now, this is an interesting story, and there's a lot of nuance to it. In fact, I would call your attention to today's episode of Tech Strong Gang, where the gang goes deep on the question of Musk buying OpenAI. I will summarize it for you, however, here in a moment. So first things first, it's important to recognize that Musk did not make an offer for OpenAI, the company that makes ChatGPT and is charging money to have people use it and all that. Basically, the OpenAI you know about. What Musk's offer is for OpenAI's open source organization, which seems a little weird that they would pay $97 billion for a company that reportedly employs 2 people and has no revenue and is dedicated to as a charitable nonprofit. Why would they want that thing? Well, the answer is because the nonprofit arm of OpenAI actually has a controlling interest in the OpenAI that you know of, and that is valued at somewhere between 260 and $400 billion. So this $97 billion offer was not a lowball offer on a $400 billion business. It was actually an incredibly rich offer on a small business that can't really be valued. And why would they do this? Well, I don't think that Musk actually wants OpenAI. I don't think he would be opposed to buying it. And I think that if for some magical reason the nonprofit decided to take the offer, I think that Musk would have investors lining up with their hands up, because basically whoever controls the nonprofit controls the company. And not only that, but if the company is to go public or have some other major transition, it will have to buy out that stake of control from the nonprofit. And whoever has their hands on the nonprofit at that point would basically be sitting in the catbird seat in terms of demanding a huge, huge penalty. So overall, the message on this acquisition is not, in fact, that Elon Musk made a $97 billion offer to take control of OpenAI. It's that they made a $97 billion threat that completely upends the financial picture when OpenAI actually does anything. Because now the shareholders are going to demand that OpenAI, the company, pay OpenAI, the nonprofit, north of $100 billion for its stake in the company. And that is going to be sort of a poison pill that's going to waste a bunch of money from the rival to Musk's own AI company. So it's savvy business, and it's not at all what people are reporting. Al, what do you think of this? And also, maybe we can talk about some other story related to OpenAI.
Well, I think as a little more piece of the sort of context, this didn't come out of nowhere. It's not that Elon decided, I'm just going to stir something up. Right? This is a continuing challenge and fight between Sam Altman and Elon. So Elon is currently suing to avoid having the OpenAI's open source piece become a for-profit. And this, again, as I say, Stephen, this $97 billion offer is a line in the sand of how much it would be worth if this non-profit were a for-profit. And it's another inhibitor to that transition to for-profit. So, yeah, this is interesting loud noises. And of course, Sam Altman came back and said that he'd like to buy Twitter for $9.7 billion, which is significantly less than Elon originally paid for it. But of course, the other OpenAI story is around their own custom hardware. And just as we heard earlier about Huawei's custom hardware for building AI solutions, OpenAI are very close to having their own hardware solution. They've gone out to TSMC to actually produce some initial units of their own hardware accelerator, so they don't have to give lots of money to Jensen Huang at Nvidia in order to train their models. So it's an interesting development to see custom-built silicon for just training and building large language models rather than a reuse of the highly parallelized GPU. So it will be really interesting to see what the technology is inside these OpenAI chips. Now, with new chip development, it's a long, slow process. And usually the first chip that you build in a new category is very much an experiment, and it still takes 18 months to 2 years to 5 years to turn that into some working silicon. And so they're not expecting to completely replace all of their NVIDIA GPUs in the near future. So your NVIDIA stock price isn't going to crash that fast. But we do see this movement away from being very reliant on the NVIDIA GPUs. And OpenAI would love to have their own dedicated supplier for GPUs where they could fully control what the GPU does and how it can be used within their AI pipelines. Well, in other OpenAI news, we've heard that OpenAI is actually getting its own AI chip, its own accelerator chip. So they've sent the designs off to TSMC for fabrication, and they'll be getting their first chips back anytime soon. This is a really significant development for them. It's OpenAI trying to free themselves from the design cycles that go on at NVIDIA and have their own design for their own accelerator. So customizing their own hardware accelerator to make their training and their fine-tuning of models much more efficient. Now, this is the first chip, and anybody who's gone through hardware development life cycles know that they're much slower than software development life cycles. So OpenAI is going to continue to be buying GPUs from NVIDIA, and your NVIDIA stock is still going to remain very valuable. But what we will see is over time, OpenAI will develop these first chips out into something that is much more efficient and attuned to their needs, and where they can customize the chips to match the exact needs they have for their AI training and their building of these very large language models, and then, of course, the fine-tuning of those models and possibly building out the inference. And we may see them build separate chips for inference as well as training. So this move towards controlling their own destiny is absolutely a really significant thing, but it's not overnight. They're talking about having a small number of chips initially, because if there's a fault with these chips over this first design, or if they find inefficiencies in these first designs, they'll want to iterate, and that takes a while to happen. So absolutely awesome to see customized silicon coming back into very strong focus, both here and also earlier in this rundown with Huawei's own hardware acceleration for AI. And I think we are definitely seeing that specialized hardware acceleration as being absolutely vital, simply moving what was a GPU and bending it into doing the things that we want to happen for AI was definitely a good solution at the time, and it may well continue to be a good solution, but there's definitely an opportunity for very specialist accelerators for these large scale out solutions. Stephen, are you excited to see more custom silicon coming into data centers to build AI solutions?
Well, sure. It's something we've seen quite a lot of, as you mentioned, from a variety of companies. The hyperscalers have their own custom training chips. Trainium and Inferentia, for example. I love those names. And we've seen similar tensor processing units appearing, for example, in the Apple M and A series CPUs. One of the early people or early companies to focus on the trend of custom silicon was Google with their TPUs. And the Google TPUs have been quite impressive. I actually have a couple of the Google Coral TPUs that are really useful in doing edge processing of video and so on. I've really enjoyed experimenting those. And there's a connection between that and this announcement with OpenAI. So reportedly, the person that's leading this effort for OpenAI and to develop a custom training chip is none other than Richard Ho, who was the TPU engineer at Google, who led to the development of their custom silicon as well. We've also heard that Broadcom is in the mix, and that may surprise you if you haven't been paying attention to Tech Field Day. But if you have been watching Tech Field Day closely, you've heard that Broadcom actually has a major chip development effort where they work with various companies to develop impressive chips of various sorts, including networking chips, but also including AI chips. So the fact that you've got Broadcom in the mix, that you've got Richard Ho in the mix, the fact that TSMC is going to be responsible reportedly for producing this chip, and the fact that this is not the first time this has happened. In fact, many other companies have done exactly this, makes it all the more likely that OpenAI is wanting to redirect some of the billions of dollars they've spent on Nvidia hardware on their own hardware. But of course, this doesn't spell the end for Nvidia, because Nvidia still produces great hardware and they've got a huge market and they've been able to sell it all over the place. They barely can keep up with orders. So overall, this makes a lot of sense and is not a big surprise. But I think it's a good move, because a lot of people are complaining about the power consumption and the cost of AI, and custom chips so far have been able to make a radical impact in terms of delivering better processing with lower power and lower cost. So I think that's what we're going to see here, and it makes sense that OpenAI would do that, even if they were owned by a potential rival. Thanks very much for joining me today, Alistair. I'm glad to be able to be here on the rundown while Tom is away. And I look forward to the rundown next week while you and I are away at Cloud Field Day. So I urge everyone listening to take a look at the Tech Field Day website. Click on the Cloud Field Day 22 link, and you'll see a list of the companies and delegates that are going to be there. Alistair is going to be leading that event, and I'm going to be standing menacingly in the doorway, glowering at him. As I mentioned, we're also in Amsterdam for Cisco Live EMEA today and yesterday, and you'll find videos of those presentations on our YouTube channel very, very soon. And of course, we'll return with a networking field day event in March led by our own Tom Hollingsworth, as well as AI Infrastructure Day. Tell us more about our AI Infrastructure Field Day, Alistair.
Well, AI Infrastructure Field Day is renamed from AI Data Infrastructure, because it's not just about the data, but all the wider infrastructure that we need. We'll be on April 23rd and 24th, and we'll be hearing from a variety of organizations who are involved in building out the things that enable you to build an AI and to operate an AI environment. I think that's going to be a really exciting event as well. But of course, my focus right now is on Cloudfield Day 22 next week, and I'm looking forward to having you all join us for Cloudfield Day.
Well, thanks very much, Alistair. Looking forward to seeing you as well. And thanks everyone else for watching the Gestalt IT Rundown. You can catch new episodes every Wednesday as a YouTube video or in your favorite podcast application. The Rundown is streamed on TechStrong TV, and you can often catch us on other TechStrong and Futurum Group programs, including the daily TechStrong Gang. We'll be back next Wednesday to talk about all of the IT news of the week that was. Until then, for myself, for Tom Hollingsworth, for Alistair Cook, and all the rest of us in the Gestalt IT family, here's wishing you and yours a huggable Darwinian day.